Hello and welcome to the Wright Know Your Money podcast. I'm Ashley Smith.
And I'm Tom Richards.
On the Know Your Money podcast, we talk everything from financial planning tips to how what's going on in the world around you affects the money in your wallet and most importantly, your financial future.
If this podcast helps you, please like and subscribe so we can help as many people as possible moving forwards. In today's episode, we're going to be discussing life cover, one of the most important elements to any financial plan. One of the most common inquiries we have here at Wright is new clients asking our advisors for life cover and asking the question, how much life cover do I need to protect me and my family? Ashley, can you explain to our listeners why the simple question of how much life cover do I need isn't as easy as it may seem to answer?
Of course, Tom. So, you wouldn't be human if you didn't run your eye down your bank statements, see the name of an insurance company and think, is that what I'm paying for life cover, or do I really need to spend this amount? After all, I'm fit, I'm healthy, I'm well, I'm feeling fine. And unfortunately, being a financial planner has its lows as well as its highs. From my point of view, there's no better feeling than creating a financial plan with our clients, working with them for years and years and years and seeing that plan come to fruition, usually in the form of people retiring earlier than they would have originally thought they could. Unfortunately, at the same time when looking after clients, things don't always go to plan. I'm going to give you an example here of a client who sadly passed away. Now, the client was obviously feeling fine, he was great, he was in good health, he ran a successful business that he felt was ultimately he was happy to work in for the next few years. He hadn't really set a deadline as to when he wanted to retire. All he really knew is that by the time he did want to retire, his children would have left home. He and his wife were going to buy a mobile home and they were going to travel around Europe. Exactly what he should have done 30 years ago is often the quote that we get from clients when they get to retirement. One evening, he went down the pub. He'd had a stressful week. Some of the suppliers hadn't delivered on a big contract that were in place. He felt he needed to unwind. Unfortunately, he had a heart attack and tragically died on his way into hospital following the heart attack. He was in his mid-50s. But as anyone knows who follows football, heart problems can strike even the fittest people at any age, and we've seen that in some of the international competitions in recent years. Also as well, we probably all know someone that's had cancer or been in a car accident or had some kind of serious illness. So yes, it can be tempting when you look at the life cover on your bank statements and say, I don't need that, it's too expensive. But what's the true cost of not having it, certainly if something were to happen to you?
Obviously, losing a client is tragic, and it's the worst part about servicing clients as a financial advisor, as you get to know your clients incredibly well and almost become part of their family. Could you explain, Ashley, to our listeners the outcome for the client's family because he had the foresight to purchase life cover?
Yes, so because he did have that foresight to purchase life cover and discuss his protection needs with a financial advisor, he was able to protect the family in the event of this worst case scenario. He was self-employed as a business owner and he had life cover and income protection that were recommended by his financial advisor. The income protection meant that if he fell ill for 4 weeks or more and wasn't earning anything from his business, the insurance company would provide an income until he was able to go back to work. He also purchased the life cover, which is obviously the one that paid out when he sadly passed away. It provided a cash lump sum within a matter of weeks, which gave the family enough capital to live off for the rest of their lives. So it's an incredibly important element of the financial plan and ultimately advice given. And it doesn't just apply to those who are self-employed, also if you're in employment as well, life cover can be invaluable. I'd just like to take this opportunity to ask our listeners a quick question and to say, if you were to pass away or be critically ill and not able to return to work for a long period of time, would your spouse, your children, your dependents be able to pay all of the household bills on their own with the loss of your income? Would they want to continue working to pay for the loss or to cover the loss of your income to the household?
Exactly that, and now that we've given our listeners an example of why you need life cover and the value that a financial advisor can provide, could you explain the process here at Wright as to how protection is recommended to our clients?
We can, so it's worth sort of going back to the good old days where it was as simple as an insurance agent visiting your house telling you that you need between 10 and 20 times your salary with no real science behind where that 10 to 20 times your salary figure came from. Today, although it sounds more complicated, it's just more tailored to you. Especially if you are employed and you have death in service benefits, which is almost a life cover policy that your company pays for, or if your partner's working or not working, or if you're self-employed or if you're employed. There's a whole range of different things that need to be considered. Now at Howard Wright, very broadly here, so this isn't sort of advice for everybody to go out and start setting up their life cover. We would still always recommend speaking to a financial advisor and a professional to get the amounts right and the types of products right for you as well. But very generally speaking, firstly, everyone really should make sure that any mortgage or any debt is covered. That way then, if someone passes away, I'm assuming a two-income household here, but if someone passes away, the house is paid off, there isn't then the worry of how do I pay for the mortgage, how do I pay for the car or the loans or whatever else it is that you've got as debt. Secondly, we would say you need to ensure any other commitments such as children's educational needs, so if you've got school fees or university fees, or even future university fees. The children might not yet be at university, but if the plan is for them to go, making sure that there's cover there to provide enough for them if your income has ceased because you've sadly passed away. Thirdly, you need to also have enough of a cover to fund for the loss of any income to the household to make sure that lifestyle can be maintained. So it's not always just about making sure the bills are paid, but also making sure you can retain your lifestyle. You can still go out and you can still enjoy your life and enjoy that life with your family, with your children. Finally, and this is often missed by many, it's also worth covering or providing some sort of cover to make sure that your longer term financial goals are covered, such as retirement. It's very important to make sure that the house and the debts are paid, the children's school fees are covered and that you can afford to live today. But then if that money runs out at 60 or 65 and you've made absolutely no provision for retirement, do you as the surviving partner in this relationship want to go back to work at 60, 65 because there's been no provision put in place for later life? So that often gets missed by a lot of people, and it's something that we're quite keen on sort of bringing to our clients' attention. And once we brought it to the attention, actually working out with them on how much do you need for all of these different areas. And that's not just with Howard Wright, any good financial planner should be doing that for you as well.
That's fantastic, Ash. Thank you very much. And finally, can you explain possibly the biggest misconception with life cover is that it's expensive? How much does life insurance cost?
So hopefully most of our listeners will be pleasantly surprised that life cover isn't as expensive as many people think, certainly if you're setting this up earlier in your life. Now, as much as I'd love to sit here and give an exact pound and pence amount, I can't, unfortunately, because it will be very much dependent upon that client's personal circumstances, their age, their health, their partner's age and health, if it's a joint policy, the length of time that covers for, the amount that covers for. But it's probably still going to be a lot less than you expect it to be. So again, speaking to a financial advisor there will allow you to establish really what that cost is. Also, because there's all different types of policies, there are some that pay a lump sum out on death, there are some that pay an income out on death. Again, depending upon what you want there, the prices will differ as well. Because no one knows what's around the corner, we would again strongly recommend that you speak to a financial advisor such as ourselves at Howard Wright to make sure that we can tailor that cover exactly to you and your needs and give you then the cost for cover that's relevant to you and not just a multiple of your income or what your friend took out as life cover, which is often something we get quoted unbelievably. So whilst I can't give an exact answer, there are lots of variables, and hopefully that gives a bit of an insight into what they are.
That's fantastic, Ash. Thank you very much for covering that. Can you now explain to our listeners how they can get in touch with yourself at Howard Wright or any of our other advisors and how we can help them?
Yeah, so best way to get in touch, not just for financial protection, but for your financial review and financial overview, which will include protection needs as well, is to visit the website at www.howardwright.co.uk and fill in the inquiry form, or if you can call us on 0345 688 4939, myself or any of our chartered advisors would be happy to guide you through the process. Thank you very much for listening to the Howard Wright Know Your Money podcast. I've been Ashley Smith.
And I've been Tom Richards.
If you're watching this on YouTube, please like and subscribe or share on your socials. And if you're listening to us on Apple Music or Spotify, please drop us a follow and leave us a review.
It really helps other people find the podcast, enabling them to know their money better and build stronger financial futures. Please also check out the Howard Wright Linktree for loads more tips, tricks, articles, videos and podcasts just like this one that you're listening to right now. And most importantly, stay tuned for the future episodes.
This recording contains information from sources believed to be reliable, but no guarantee, warranty or representation express or implied is given to its accuracy. Howard Wright does not undertake any obligation to update or revise any future statements. Past performance is not a reliable indicator of future results. Investments can go down as well as up, and actual results could differ materially from those anticipated. This recording is for the information purposes only and has no regard to the specific investment objectives or financial situation of any individual. The information contained in this recording is not intended to constitute and should not be construed as investment or financial advice. Appropriate personalized advice should always be taken before entering into any transactions. No responsibility can be accepted for any loss arising from action taken or refrain from being taken based on this publication. Howard Wright is authorised and regulated by the Financial Conduct Authority.